Hello guys, welcome back to the channel. I have a video about support and resistance for on the daily on intraday traders. Someone commented and was like, do a video on support and resistance on the intraday time frames, because most of the videos I've been doing, they're about swing trading, so they wanted me to do one on the intraday trading. So I have I have two examples, but they are all going to be on the NZD pair. So I don't want to waste a lot of time. I'll go straight to the point. However, before I do that, you guys, you have to subscribe. Our channel is still growing. We are less than 100 subscribers. So guys, subscribe, 5 seconds, and then I'm going to go straight to the point, and then I show you support and resistance on intraday time frames. I'm going to start on a daily, and then I'll give you the entry on the 1 hour or 30 minutes, and then the next example is going to be on the 4 hour. I know most people want to trade 4 hour and less, so they have to be in and out of the market so swiftly, so they don't want to waste a lot of time looking at the charts. Okay, so subscribe, 5 seconds, and then we proceed. Okay, so let's proceed. So now we have the daily time frame. The daily time frame, this is euro and this is NZUSD. I like to talk about euro USD because most of you guys trade euro USD. So this is NZUSD. This is the daily time frame. And what do you see? Remember what I told you when you're drawing support and resistance. What is the first thing you do? The moment you get to the chart, make sure everything is evened out. The first thing you have to do is to look at the point where price has been rejecting. And how do you do that? Go to the line chart. So you first thing you do, come to the line chart. And what do you see on the line chart? You're going to see, I'm going to use what should I use? I'm going to use lines to mark. No, I'm going to use the rectangle tool to mark. You see down here, we have a point here, we have another point here, we have another point here, we have a point here, we have a point here. But we're going to draw the upper one, this one, because this one has 3 touches, and this one is looking like the head. This is an inverted head and shoulder, and this one is looking like the head. So you're going to draw your support on these touches here. This is the late time frame, remember. So you draw your support there, make sure it is clean. So now here, up here, what do you see? You see a touch, and another touch. So you're going to do your resistance up here. So you're going to get this and then draw your resistance up here, like that. Make sure you draw on the tips like that. So when you come back to your full charts, this is what you see. You see that price has been rejecting. You see, retested this area, tested it 3 times, tested it once, second, and this is almost 4 touches down here. That is now support. Then up here, where is our resistance, you see there's a lot of rejection. I think this is obvious, everyone can see it. There are a lot of rejections up there. So now that you have gotten that, so what you expect is, you see there was discharge, price came here, rejected up to down here. So what you expect is that when price comes back here again, it is going to sell. So now that you know that it is going to sell, what do? Do you sell immediately it gets here? No. You'll first wait for price to come up here, show a rejection like it showed here. When it shows a rejection to this level, then you drop to the lower time frames to look for your entries. So now, for example, price came here, this was Monday, it showed a rejection here. So you dropped it down. Let me highlight, let me put a line on Monday. So you drop down to the 4 hour. When you drop down to the 4 hour, what do you see? It had this huge bar, and then it showed you a pin bar. And I told you guys, the moment you see a pin bar at a price of support and resistance, that is a sign of a reversal. Regardless the color, it might be green, it might be red. As long as you see rejection and then you see a pin bar, that is another sign that we are going to reverse. So now you see a pin bar on the 4 hour. You drop down to the 1 hour. See, what do you see on the 1 hour? you see that there was a pin bar already before even the 1 4 hour came. There was a pin bar already here. So your entry time frame, it's going to be on the 30-minute or 15-minute. Okay, any time frame below the 1 hour that you're going to see fit, that's where the entry frame is going to be. So you come to the 15-minute and then even these things out, just make the chart smaller. So what do you see on the 15-minute? For me, I see a double top. I don't know what you see, but for me, I see a double top. And when you put an RSI, you're going to see a divergence here. So we are at this place of resistance, and price is already rejecting on the daily time frame. And when you drop down to the hour entry time frames, you see a double top. You know, a double top is a reversal kind of what do we call it, chart pattern, a double top or a double bottom. So you expect the price to reverse, and then it shows you a double top that it is heading down. You might see a double top, you might see a head and shoulder, you might see a break and descent. In this case, it was a double top, and then it broke in this area, then it came back to retest this area, and it dropped down. So where is your entry going to be? Your entry is going to be on the second top. As long as you see a first top on your entry time frame and then price retraces, then if it comes back to make another top, just wait for bearish price action. That is, wait for red candles to start printing, and then you enter. Put your stop losses slightly above this top here. Let me show you. So I'll just make it white. You see, this candle printed was not good enough. This one also printed, then the green one, then down this bearish candle, this one that closes below the green one, that is the one you enter from, and then put stop losses slightly above. I think you can use 10 pips, slightly above. That is a risk to reward which is not so scaring for intraday traders. So you're risking 10 pips to get, your target should be the next resistance. So you're risking 10 pips to get, let's say, that is far. Let's come to 1 hour. It is there, it is appearing on the 1 hour. So you're risking 10 pips to get your target should be here, to get 115 pips, which is a risk to reward of 1:10. Now that risk to reward is very good. I'll take it any day, anytime. Now the problem comes here. And by the way, if you enter this trade, you would be in 69 pips. You're almost there. You'd be already in 1:6. If you decide to close from there, you're already good to go. Now the problem comes from here. For me, okay, I don't know, maybe for you're comfortable with it, but for me it is a problem. Why? It's because in order for you to capture this risk to reward, you'll have to be on the charts. The moment you see on Monday the candle opened, let me show you, candle opened from here and then started rejecting off here, that is now when you drop to the 4 hour to see anything, any sign of reversal. Let's say rejection, a rejection, pin bar, anything that shows that indecision candle dodges, anything that shows that we are rejecting from here and there are signs of going down. After getting that, now you drop to the 15 minutes, the time frame where you're going to enter from. You're going to be on the 15-minute monitoring the creation of each and every candle. Now me, that is where I find the problem, sitting on the 15-minute for a long period of time, just waiting or monitoring how these candles are being printed. But if you don't have any problem with that, then it is okay. Just wait for a head and shoulder or a QM pattern or a double top or a break and retest. You cannot fail to get any three of that. And then enter a sell to the next support, the nearest support. Okay? And then you're all to go. Same thing applies to the 4 hour time frame. People who are trading the 4 hour. Same things applies to the 4 hour time frame. So we come to the 4 hour. Let me remove this. So we come to the 4 hour. Good. So 4 hour. First thing, what do you do? Go to the line chart. What do you notice? You notice support here. A place that has been retested many times, and then draw your support there. Why do we draw to this, draw at this area? It's because you have 1 touch, 2 touches, 3, 4, 5, 6, it was used as resistance, 7, 8. Those are 8 touches. Those are enough to make our support. And then up here, we're going to notice what we call resistance. Why do we notice resistance there? This is a place that has been touched 1, 2, 3, 4. Okay, we count 3 because this one had not yet touched. So 1, 2, 3. So we expect that if price comes back here again, it is going to reject. So you go to our candlesticks. Now you wait. If price reaches here and gives you this rejection and then shows you some bearish price action with this candle closure, then you're ready to sell. You can even sell from there. Sell from there and put stop losses up immediately. You see that bearish candle. Sell from there and put stop losses up. That will be 17 pips. Targeting 100 pips. That is 1 is equal to 6. Right now you'd be in a 1:3. You can decide to opt out from there, or you can decide to push on. However, sometimes if it prints this, you can drop down to the 5 minutes. Why is it the 5 minutes there? Drop down to the 5 minute. Drop down to the 5 minute, come to this area. What do you see? You see a very huge double top. This is a top. Price consolidates here for a while, comes up, but instead of making a high high, makes a lower high and start dropping. So what you do is you wait for serious bearish price action. When it drops here, enter, put stop losses up, and then target the next support. Just like that, it repeats itself. I told you market price action is fractal. The same thing that happens on the higher time frame will happen on the lower time frame. You just have to be keen. Now that you're using lower time frames, you have to be keen, and you have to always be on the chart such that you do not want to miss your setups. So why? Because your setups will happen quickly. For me, who is trading and executing on the 4-hour using the weekly as my high time frame, I don't have to be on the charts all the time. I can see a setup going to form. Yes, like for example, this is a head and shoulder, inverted head and shoulder. Go to the line chart. This is left shoulder, head. The thing here is all ahead, and then this is the right shoulder. So what is happening is I'm seeing a setup going to form around here. This price action is going to reach here. So when it reaches here, I expect it to buy because it is reaching on the shoulders. So I expect it to buy. However, it's not going to happen today. It might happen today, but it will take time. It might happen today in the evening, or it might happen tomorrow, or the day after tomorrow. So my work is to come here each day in the evening and check, have we reached my area? If I reached my area of interest, or what people call point of interest, and then I drop down to the 4-hour and look for my entries. Put stop losses below here, and then target the next resistance. Just like that, you have your support and resistance on the lower time frame and high time frame. Support and resistance is very easy to trade. What you have to do is manage your risk. You must have enough stop losses, because when price reaches here and unit is going up, you don't know how far it is going to retrace down here. However much unit is going up, it will first retrace. So you have to put enough stop loss or enough wiggle room such that even if it retraces, it doesn't take you out before moving to your anticipated direction. I hope we are together up to that point. So guys, subscribe to the channel and also watch the videos until you understand them. If you have understood them, can leave a like. And that is all for today. Subscribe to the channel. Bye.